Thematic ETFs that invest in promising areas like genomics, clean energy, and blockchain technology have experienced tremendous growth. And today's ETF battle features a head-to-head clash between two ETFs with a multi-thematic approach. It's the SPDR Kensho New Economies Composite ETF, that's ticker symbol KOMP, going up against the ever-familiar ARK Innovation ETF, that's ARKK. So who wins the battle? Find out right after this. Welcome to ETF Battles. I'm Ron DeLegge. If you're here for the first time, be sure to hit that subscribe button. That way you never miss any of our fine episodes. And post your comments below. We'd love to interact with the audience. If you've got a specific ETF battle that you'd like to see, give us those ticker symbols, again, in the comment section below, or you can hit us up on our Twitter feed at ETF Guide. Now, before we go any further, just a quick heads up. The Money Show has got an upcoming virtual conference on ETF investing, and you're invited. It's from June 29th through July 1st, so be sure to mark your calendars. I will be participating along with Todd. Plus, we've got three other ETF battle judges, Cynthia Murphy, Dave Krincis, and Mike Akins. The registration link to the Money Show is posted below in the description section, so again, be sure to attend. Today's matchup features the KOMP ETF, that's ticker symbol KOMP, K-O-M-P, versus ARKK. Now, KOMP was launched back in 2019. It's new kid on the block. ARKK has been around since 2014. Also keep in mind that KOMP is index linked, whereas ARKK is actively managed by Cathie Wood and Company. Today's battle was requested by Dimitri P., who's been enjoying ETF battles. Thank you, Dimitri, for watching. And I'm guessing that Dimitri, like many of our viewers, is interested in growth stocks and ETFs that own them. So that's what's on today's menu. Helping us to judge today's matchup is an illustrious duo. We've got Todd Rosenbluth with CFRA Research and John Davi with Astoria Portfolio Advisors. John and Todd, great to see you.
Thanks, Ron. Great to be here.
Great to be with you.
So our four battle categories are cost, exposure, strategy, performance, and then we've got our mystery battle category where our judges can flash some of their analytical prowess by selecting a factor or possibly several factors of their choice to make their convincing arguments. Our judges are going to pick their favorite ETF in each category. They can also opt for a split decision. They can opt for wild cards. They can protest. Listen, the more mayhem per capita that we can have on the show, all the better. It's completely up to them, but we will declare a battle winner at the end of the show. So let's, without further ado, begin with cost. Todd, you're up. Get us started.
I get the easy category to start off with. KOMP is 20 basis points. That's much cheaper than 75 basis points that you'd pay for the actively managed ARK product. They both are relatively liquid in our opinion. We think the SPDR product is by far the winner.
Thank you, Todd. That's a strong start. John, how do you see it?
Yeah, I can't disagree. KOMP is much, much cheaper, so it wins on that category specifically.
Thank you very much. That moves us to the exposure strategy category. John, you're still up. Who's your battle winner?
You know, I think that KOMP, in my eyes, per unit of risk, you know, I'm going to say that is kind of what we're doing here at Astoria Advisors. You know, for us, the way we manage money, it's to be diversified, you know, keep costs relatively low, you know, spread your bets. So ARKK is, you know, you mentioned, you know, Cathie Wood's, you know, grand view of the world. And, you know, I'm a big fan of her for sure. And we use some of her ETFs. So I think ARKK is like the overarching, her highest conviction ideas. And she has like different sleeves, which are much more narrow, specific, maybe less risk. So we use some of her sleeved ETFs. You know, but at the end of the day, like, you know, KOMP, I think is, you know, 400 stocks. You know, Cathie Wood's ARKK is about 50. You know, they're all trying to capture, you know, innovation type themes. ARKK has like 35-ish% in healthcare stocks, whereas, you know, the KOMP has maybe only 15%. They both have, you know, 35-36% in technology. So, and then, you know, the market cap ranges, you know, I think like Cathie Wood has like a lot more large cap, whereas KOMP has, you know, some in large, some in small, some in mid. So again, it's much more diversified. It's what you would expect from like a passive rules-based approach, Comp B. So overall, I give the category winner for exposure on a diversified per unit risk basis to Comp B.
Got you down for comp. Thank you very much, John. We shift now to Todd. How do you see it in terms of exposure strategy? Do you agree with John's analysis?
I do agree. You know, the diversification, I think, is key. This, as you mentioned, this is index-based. It's using artificial intelligence to identify those future themes, but it's really spreading that risk around. So it holds Tesla, for example, which you'd find within ARK, but it's about a 1% position overall, whereas it's a heavyweight. It's actually driving ARKK's overall performance. So we think it's spreading those bets around. That's a positive for us in terms of its ability to repeat its performance success.
Very good. Thank you, guys. Now we got to shift to the performance category. This is where we take a look at to see how these two ETFs have done versus each other. So Todd, you're still up. Give it to us.
Yeah, so you mentioned that we don't have a 3-year track record yet for the comp product. So we're going on just more recent period of performance, but we're impressed with what we've seen with comp. That's our winner in this category. You can mark that down as well. Not only did it perform well in 2020, but it's actually continued to rise higher in 2021, which is encouraging again from a consistency potential of its performance. Whereas we saw, of course, ARK pull back. There was a rotation away from some of those higher profile stocks that they invested in. So we think the performance is a winner again for comp.
All right, I got you down for comp. Thank you very much, Todd. John, how do you see it in terms of performance? Which of these two ETFs stands out to you?
So what stands out is comp, and it has done well in the shorter term, but you got to give some credit to ARKK because, over a 3-5-year period, live track record. I mean, she has put up some monster numbers. 3-year annualized return for ARKK is 37%. 5 years is 45%. I mean, she's doing what people said was kind of dead, which is like take massive high conviction bets. The whole superstar portfolio manager was kind of thrown out the window. She has revitalized that, and she has created, a boom industry for people that, I mean, there's a lot of people trying to mimic what she's doing. In fact, we have our own disruptive growth ETF model portfolio. So comp definitely wins on a 1-year basis, but I got to give credit, because when you're evaluating a strategy, a stock, an ETF, you do want to look at a long-term track record, and Cathie Woods definitely for sure has that. And Todd mentioned, Tesla. I think that's very important to highlight. ARKK has like very big high conviction bets. One point in time, the Bitcoin trust was 10%, Tesla was over 10%. So you are going to go down or up, based on whatever she has at the very top of the ETF, and I kind of like that. So,
all right. So, which is your pick, ARKK or comp?
I'll give it to ARKK.
All right, perfect. I got you down for ARKK on performance. Now, the mystery battle category, where our judges get to pick that one factor or multiple factors that may be the deciding factor for today's matchup. So, John, what's your mystery battle category, and who wins it?
On a fundamental basis, I think Tesla is like really difficult to value, so it kind of drives the valuation for ARKK. It just kind of is what it is. But I think like when I take a step back and look at like what comp is trying to do, being much more diversified, I think that winds up looking better for its fundamentals. If you look at the PE ratio for comp B, it's about 21. For ARKK, it's up in the stratosphere, 100 PE ratio. The earning trends for comp are a lot more stable, kind of generally, upward rising. This is 2021 earnings trend. So I think, ARKK is just kind of all over the map just because of what's going on with a few of those top positions. So I like the fundamentals better in comp B. So I'll give that the battle category winner.
Thank you, John. Todd, you're up in terms of mystery battle category. What is it and who wins it?
Well, you know what I'm going to do, Ron. I use CFRA's ETF research. That I'm the head of their overall research, so I'm going to stand behind or in front of that overall research. As you can see, the naming behind us, we have a 5-star on the Spider Comp product, whereas we have just a 2-star for ARKK. We think ARKK is going to have a reversion to the mean. It's already started that process, and it's likely to underperform the broader universe. We think the consistency of returns, the performance structure, the diversification of what's inside Comp makes it a more attractive ETF. So that's our winner for the mystery category.
All right. Thank you very much. Now, the final opportunity for our judges to weigh in and recap their overall battle winner between Comp versus ARKK. Todd, give it to us.
Yeah, it's straightforward. Comp is my winner. It's cheaper in the track record that it's head-to-head. It's outperformed. We like the diversification, and we like the consistency and its likelihood of outperforming. So as much as I think what ARK has done has been amazing in the past, as we look forward, we think Comp is going to be the better performer.
All right, very good. I got you down for Comp. John, your last opportunity to weigh in. What is your overall battle winner?
You know, I agree with everything Todd said. It's everything we've talked about. So I give it to Comp. You know, for us at Astoria Portfolio Advisors, like if we are going to use an ETF, like obviously we believe in it, we would just never use ARKK just because it's massive risk. It's tight, you know, a lot of track and error, tight constituents. You know, we like spreading our bets out across a lot of different, you know, kind of sectors, regions of the world, you know, kind of keep track and error a little bit tighter. So we would personally use more Comp compared to ARKK. But I definitely respect everything that Kathy has done with this one ETF over time. It's basically unheard of. But we would just never use it. Just doesn't align with our philosophies at Astoria Advisors.
Well, thank you, judges, for weighing in. And according to my battle scorecard, this is basically almost a clean sweep for Comp. I mean, really the only category where we had a little bit of variation was on performance. And that was with John, just because ARKK has a longer performance history. But in terms of recent performance history, Comp has been neck and neck with ARKK, holding up pretty good. But you guys mentioned a lot of good points. You know, obviously Comp has a bigger portfolio, more stocks, more diversified, also lower expenses, which is beneficial to long-term investors. And Comp, again, the overall winner, index linked, by the way. So that index approach seems to be working for Comp. We'll have to revisit this matchup. You know, that's a great part about ETF Battles. Is just because we do a matchup doesn't mean we cannot do a rematch. And so I'm going to keep my eye on these two ETFs because I think we do have a rematch in the making. So what do you think about today's? Oh, go ahead.
You know, what's funny, Ron, is that if we had this conversation last year when ARKK was going to the moon, it'd be very interesting to see what, you know, how people would react and you know, what people's opinion about that ETF. But, you know, as we like to say at Astoria, risk cuts both ways, right? It's great when it goes up, but when it comes crashing down, you know, it also, you know, has a real negative impact. So it'll be interesting to revisit this in a year or two from now and see, you know, how her portfolio, you know, has rebalanced and has reacted to the market environment.
100%. Todd, any final thoughts?
Oh, well, see you next time on the battle.
I love it. So which ETF battles would you like to see in the next episode? Post your ticker symbols in the comment section below or hit us up on our Twitter feed at ETF Guide. Be sure to hashtag ETF Battles. I'm Ron DeLegge. Thanks for watching. We'll catch you next time.